Today's phenomenal interview is with Kobe Bowers. Kobe's a former military medic who unfortunately suffered some brain trauma himself and has set up a cause to help with that. He talks about that. He talks about also investing in real estate, starting out with single family, scaling up to multifamily, starting out as an LP and now being passive in deals and growing that portfolio, along with a lot of lessons he's learned along the way. So really, really interesting interview and inspiring interview at the same time. So please stick around for all of that. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barry Griffiths. Now today we're joined by Kobe Bowers. Hey Kobe, how you doing, man?
Hey Barry, thanks for having me. I'm doing awesome and glad to be on here today. I love the energy.
Oh, well, thanks, man. I'm happy that you're on here. I'm excited to dive into today's conversation. But before we do so, can you give us a high level sort of mini bio about yourself, right? Tell us more about who you are and what you've been up to.
Sure, yeah. I got into multifamily, a very long I'm not even going to try to do big words today.
You're with me, don't worry. I don't have a single big, the is the biggest word I have, I think.
Yeah, no, I started out, my first career was military, active duty Air Force, retired about 4 years ago, so did 23 and a half years. I was a medic. And that's the furthest away from real estate that I think you can possibly get. And got my first taste in real estate back in about 2001. So I'm kind of really dating myself there. But got into a unit where we were deploying a lot. 9/11 happened, and instead of spending my money on nice cars, brand new trucks, and stuff like that, I started buying single family homes. It was something that's kind of always interested me. And I'm like, hey, I got all this extra money. And that's really the bug that got me going. And, fast forward through my career, I stayed in the single family because that's really all I knew. But I knew I wanted to grow it, and I knew single family was a lot of work, and started listening to some podcasts about multifamily. And right before I retired, I was like, you know what, I need to figure out how to get into this multifamily, for the scalability. And took a leap and went to a conference and just started educating myself. And then that was in October of 2006, September of 2016, when I kind of really had that aha moment. Spent a year pretty much educating, spent money, I don't know, a couple $1,000s on books, conferences, just trying to soak up as much information. And it wasn't until January, February of 2019 that I actually got into my first multifamily deal. And this coming week, depending on when this show comes out, hopefully we've already closed, but it'll be our 540th door that we've been a partner in, either as a GP or LP in the last year and a half. And I have two other deals under contract and one that we put an offer in, and I have three more sitting on my desk. So 2021 is looking off to be a good year. And I love it. So it allows me the freedom to spend with my family. I work from home. I get up every morning, make coffee for my wife, eat breakfast with my son and her, and then go to my office. And so I don't, I make my own schedule, and to me, that's why I really got into real estate as well.
I love that. I love everything that you said, but that last part really speaks to me. I'm sure it'll speak to a lot of people. I think for us, a lot of us, that's why we get into real estate, right? It's not like so I can say I have $2 million in the bank, and I don't have $2 million in the bank, by the way. But or drive a Ferrari, or live in a big house or whatever. It's those simple things, like you said, right? Just being able to spend time with your wife, with your son, to have that freedom to do what you want with them, essentially, right? And I think that's like the biggest part for me of real estate is what drives me, what excites me, what I love about it.
100%. And it's I think finding your why is an important piece to the real estate, and especially if you're going to do this, because it's really my passion. And again, I live in, like we talk, I live in Colorado. I live off a dirt road. So a Lamborghini sports car isn't going to work. A four-wheel drive truck is more my style. But, beyond that is, yes, this time, the freedom and stuff to spend with family. But another thing that I do, my team and I, is we donate 20% of our profits back to veteran and first responder charities. And then we try to focus a lot of our acquisitions around that class C, looking for affordable housing. And our goal, we're not quite there, but what we're working on is trying to set aside up to 20% of our units for HUD VASH, which is basically it's Section 8 for veterans. So it's homeless veterans that are potentially becoming homeless and they need a place to stay. We're trying to accommodate that, because that's really one of our things. That and suicide is what we're focusing on as a company to try to give back to. So.
Wow, what a phenomenal cause. And for anyone who's listening, me included, wants to donate or do anything for that, is there any way that we can find out more about that great cause?
Yeah, actually, so my wife and I actually this during COVID, we decided to launch a nonprofit. So we actually started a nonprofit. It's going to be geared a little bit more towards research on it, but it's called the Paper Crane Foundation. So yeah, the www.papercranefoundation.org. And really what we're doing this year is so really my story too is so I was injured twice in Iraq, blown up twice, becoming a wounded warrior, and ended up suffering a traumatic brain injury. And and that's kind of where the nonprofit piece comes into it, is giving back to those organizations that helped me get me where I am today. And what we want to do is I'm taking myself and seven other wounded warriors, a first responder, and a researcher, and we're actually going to Mount Everest Base Camp this coming September, and it's all for doing high altitude research on traumatic brain injury. And then we got some great fancy medical gadgets, equipment that we're taking to do testing all the way up. That is hoping to create cutting edges. It really is this equipment. We're testing it in extreme field. Hopefully it comes back and it can be put out on like ambulances. It can be given to medics in the military to more quickly diagnose traumatic brain injury, concussion, altered mental status in the field, and do it a lot more objectively than what we have available to us today.
Wow, incredible. Well, thank you for sharing your story, and thank you for your service, and thank you for doing this, for creating this amazing cause, and for starting a non-profit. I'll definitely I'll include a link to start off with, so anyone who wants to donate or do anything with that, and I'll personally definitely be donating to that. So that's incredible. Out of interest, what does that high altitude come in? What part does that play in the? Is it supposed to have a healing effect or something?
No, so really, we were looking for something that, so the research component is obviously a big piece of this, but we also wanted something that, we could prove to ourselves as recovering service members, but also to our fellow brothers and sisters out there that have suffered injuries, whether it's, it's physical injuries, mental injuries, post-traumatic stress, that, you can, you don't have to be couch locked, and that's, you're the broken veteran and you stay at home and you're the shell of yourself. We're hoping to show our other veterans that, with the right help and the right treatment, you too can accomplish good things. And we wanted something that made a statement. And so Mount Everest Base Camp is that statement, to really show that, yes, because it's not easy. And also the researcher we're bringing on is part of the Marcus Institute of Brain Health, and they're doing an outstanding job for veterans. I was actually a patient there. One of the researchers that we're pulling from there to go with us. There hasn't been any studies on the effects of high altitude with potentially former brain injuries. So I think the last study he said he found was something like 20 something years ago. So we want to make a statement. We really want to test this equipment out to extremes. So we're going to go up to 19,000 foot. The only reason we're not going to the peak is because my wife said no, and so my kitchen class ends at base camp, so that means that's where we ended at.
Base camp is still will still be an incredible achievement, right? It's like,
It took
wow.
about 9 to 10 days for us to get up there.
Wow, wow, man, that's so cool, so cool, and you guys are amazing, absolutely amazing. So thank you guys for everything that you do. Back to the real estate. So you started with single family homes. What was your initial strategy with single family homes? Was it just buying them through the MLS 20% down, or did you have something else going on?
No, pretty much that. Yeah, it was nothing fancy. It was, there was no, late night fix and flip seminars, off of TV or whatever. It was just like, okay, let me, I talked to the bank. The bank's like, we need 20% down. Okay, cool, and um, and it was a buy and hold. I was just like looking at the long term. I looking back, I'm surprised I didn't lose my butt. Um, I knew simple thing. Okay, well, if the mortgage is this much, taxes and insurance. Cool. I factored that in. Right, my mortgage is this. The rents can be this. There's my delta. There's my difference. But now I'm like, oh, I didn't even factor in, terms, vacancy. I didn't figure in operational costs, repairs and maintenance. In single families, very slim margins, and that was the other it was a lot of work. And so I made it work, and then realized, I'm like, man, this has got to be something easier than this, or something a little bit less stressful and more productive scalability. And that's when I found multifamily, and it's rocking and rolling since.
So you mean to tell me that the difference between your mortgage and the rent, that's not cash flow?
Right,
Yeah, I was the same way when I started. I was like, oh, you're going to make $400-500 of this, and then repairs and maintenance happens. There's a capex item that happens. There's a vacancy, right? There's a turn, like you said, right? And you're like, oh, okay. I ended up just about cash flowing, and it's really interesting for people who are starting out. Just as an example, what are some expense items that they should consider and remember when they're analyzing a deal and trying to figure out what their cash flow would be?
Yeah, I'm assuming on the multifamily
Oh,
side.
single family. Start with a single family. Yeah.
Well, yeah, a lot of things is taxes. A lot of folks don't realize that, hey, if you purchase and stuff, your taxes are going to potentially go up. And not only that is looking at the municipality of, hey, how often do they reassess those taxes? Mm-hmm. And then how do they reassess it? Because that'll give you an idea of how much your taxes are going to go up. And then the other thing too is with insurance. A lot of folks are like, oh, I just, a homeowner's insurance and stuff. Well, but then when you start thinking this is a commercial, now it's a rental property, it's an investment property, and you're not living in it as your primary residence, well, insurance is going to go up. And then, if somebody moves out, you have, like you said, cleaning costs. Are you going to go and clean it yourself? Are you going to have, a third party management? Who's going to manage it? If you try doing it yourself, great. I think, your first house, if you have one, everyone should try being a manager. Some people love it. I hated it. Best thing I ever did was finally turn everything over to a third party manager. I'm like, why didn't I do this years ago? But yeah, and then if something breaks, toilet leaks, you have to factor in some reserves for that, and one thing that I didn't realize it in the first couple of years, but appliances are freaking expensive. I had a refrigerator go out, simple refrigerator, just to replace it with the simple, killed my cash flow for the whole year. Yeah. Once everything else was factored in, I was like, what am I doing? I'm like, definitely not going to supplement my pay, and it was an appreciation play. And all this was pre 2006 or 2008, before the crash. And that's a whole nother, we can have a conversation on that too. But I learned a lot, and that's where single family, yes, they can be good, but you have to definitely buy them right. I still look at single family, but if they don't give me a return on investment after all said and done of at least 12%, I don't even consider them. Because when I look back at my portfolio, I think my return was around 5%. Wow. And so I'm like, I'm not not excluding appreciation, just the cash flow
Mhm.
piece and stuff. So I'm like, yeah. So that's kind of what, once I really dove into the numbers and I realized, okay, single families, it's good for some folks. It has its place. Some people excel in it, but just for me, I'm like, it wasn't worth the time, the money, or the effort.
Yeah, and it's like you said, right? People are successful in all aspects of real estate, right? And there's plenty of people that are successful in single family homes. But I found that too, right? All you need is one thing to kind of go wrong, and it can kill your cash flow for that year or for the few years, right? You have a bad tenant that trashes the place, and you have an expensive turn where you have to redo flooring, painting, maybe cabinets, maybe some appliances, and that can kill your cash flow for years. Where what I like about multifamily, a lot of these expenses are baked in already, right? It's kind of somewhat a lot more predictable, I think, in multifamily. What can kind of happen? You have market norms for that asset class and for that area, and you can factor that in terms of repairs and maintenance. And it's you consider that when you're analyzing a deal, and I think that's one of the things that I do enjoy about multifamily over single family. So you also said that you spent probably a year, I think, and a lot of money researching, learning, educating yourself. What was it in that year for someone who wants to transition? What would you tell them to try and focus on education? Because there's so much education out there, right? There's tons of free stuff, but there's tons of paid stuff. There's tons of books, podcasts, courses, summits. Like, it's endless, which is great. It's a great, but you can get lost in the mix sometimes. And would you have a suggestion for someone who wants to learn about multifamily, how to kind of go about it and not get lost in so much noise and have a little bit of focus?
Yeah, honestly, I think it's easier now than even what it was 3 or 4 years ago when I first got started. Especially with COVID, is I think if you're thinking about having interest in the multifamily side of things, is look for some meetups, whether they're online, because most of them are online now, and attend some webinars. And that's a good way to interact. And where I'm going with that is great. Yes, education is one thing, and you can read all the books, go to all the seminars and stuff, and it's just like anything else. If you don't do anything with it, great, you're a professional student, but you don't have a career. Um, you can align with somebody that maybe has more experience than and find them through those meetups. And that's what we do with, and I host a meetup as well. And what we do is we have networking, so we try to break folks off, and we have folks in our group from West Coast, East Coast, Central. I've even had a couple of folks from Hong Kong, Israel join in, and which was unexpected, but awesome. And there's a lot of matchmaking going on. And if it's somebody that's like, hey, I'm interested in I live in California, but I'm interested in the Midwest. And someone hey, I'm in the Midwest and I'm interested in my backyard. Let's talk. So we try to get those in, and I think that's where you get that the community of effort and that abundance is finding somebody that maybe they've done a few deals. You can take that education you've learned, that you've earned through reading and attending, and now apply it. But apply it with a mentor slash coach, right? Or somebody you can partner with to make sure you don't screw it up. Because that's the biggest fear. My biggest fear, going from single family to multifamily, was those extra zeros.
Yeah.
It's the purchase price is a lot bigger, and that screw up has more zeros on it. So that's what is try find somebody you can align with and work together, and and that'll go a long way. So that's kind of what I would say, for sure.
Yeah, it's funny, the zero thing. I remember first looking at $1 million property, and it just blew my mind. Like the $1 million number for some reason had this like halo all over it. It just kind of went and it was just so scary to me. And now, like you said, surrounding myself with people, talking to people that are doing these deals and blah blah blah, and, making offers of that size and whatnot. You by proximity, you kind of overcome that fear. You see that it's not such a big deal, right? Because like you say, those zeros can be really scary to start off with. And the funny thing is that just zeros, right? They're not going to come out and punch you or or anything like that. They can hurt you, right? Of course, but it's psychologically it's just a zero, right? As long as you're doing everything right, and like you said, you have a mentor, a partner, someone that can help you, guide you, even just an accountability group, right? Even just going to a meetup event and meeting people and talking about what you're doing, just having that piece can really help guide you and push you in the right direction.
Absolutely. You know, and I think one of the other things I really like about commercial real estate and multifamily specifically versus residential is it's all based off of data. So
Mm.
you there's not a whole lot of emotion. There's no emotion into multifamily, because if the numbers don't add up, it's not a good deal. You know, press on. You know, and it's all, you know, okay, what's vacancy rate, what's your net operating income, what's your rent comps per square footage, you know, is your market, is it you know, population growth increasing, is there jobs growth increasing, uh, you know, unemployment decreasing, you know, all these other things. Is you can pull this data, and if they're all going in the right direction, you can have the confidence this is, hey, this is good. Versus, you know, residential, you know, it's based off of what the neighbor across the street
Yeah.
sells or purchases that house for, or what they do, or how well they take care of it. Where mine is yes, that, you know, it's looked at, you know, comps, but if I can take my property and I can increase rents, say on a 100 unit by 25, $50, doesn't sound like a lot, but when you add that times 100 times 12 divided by the cap rate, you just increase a couple $100,000 you've just literally put in your back pocket for when you go to sell. And it's based off of how that property produces, not the neighbor.
Mm-hmm.
You know, so that's what I really like about it, is you take all that emotion and it's so much easier to make that decision to purchase, I think.
Yeah, absolutely. It's the numbers will tell you what to do essentially, right? How much should you spend in rehab? What kind of finishes should you do? Blah blah blah, right? The numbers will tell you what to do, and I'm the same way as well. I really like that. Essentially, with an apartment complex, you're an island, kind of, right? You're affected by what goes on around you, but if you're able to control that NOI, right, improve rents, lower expenses, you're going to improve the value of the property. You're going to improve your cash flow. You're going to improve your returns, and that's all down to you, right? That's nothing to do with a neighbor that sold the house for half of what it's worth, or that painted their the front door bright pink or whatever it is, right? None of that thing's really affected so much. So yeah, I like that a lot. What was your first property then? So your first venture into multifamily, what was that?
Yeah, you know, so I didn't dive in head first. I did tiptoe. So what I did is I joined as an LP, limited partner in the syndication. And it was with somebody that I had built a relationship with. You know, they were raising money, and I was like, "Hey, I'm interested, and but I'd like to be able to kind of peek behind the curtains. You know, I just don't want to give you my money. I want to give you my money, but I kind of want to learn and instead, you know, if I make money off the deal, great. But it's really I wanted the education, and so I did, and that was a huge help because." You know, because doing a syndication, and this was on a big deal. It was like 300 plus units. So, you know, this is like a $20 million, I think, deal, you know, and you know, I'm like got a fraction of a percent of this, but you know, what I think what was really great to see about that is the steps to take down that $20 million, 300 unit is no different, literally no different than buying a 10 unit property. You know, it's so that was a huge confidence builder and a thing of going, you know what, wow, if you know, I get that those limited beliefs of, okay, can I do this? Well, crap, I know I can do it on a small property. You know, 10 units is not really intimidating. You know, what, you know, 100 plus, but now I'm like, wow, it's the same process. You know, I just got to scale it. You know, just put an extra comma in with those zeros and stuff. But you know, it all at the end of the day, the business plans are pretty much the same. You know, the way you underwrite and analyze a property is the same. So that was a kind of a good aha moment for me, and what gave me that confidence to really jump into this.
Yeah, that's cool. I always think that being an LP, I've been an LP myself, is such a great way to learn, right? Because not only are you making a return, right? Hopefully, if you pick the right syndicators and the right partners and the right deal and the right area, but also you're getting an education, right? Just from and I didn't ask for like what you did, and maybe I should have, in terms of peeking behind the curtain. But just seeing how they report, right? How they sent me the PPM, reading through the private placement memorandum, reading through that, seeing like how they set up everything, how they got me to wire the funds. Like, was there a portal that they got me to join? How often do they report? Do they get a monthly? Do I get a quarterly? Do I get distributions every month? Do I get distributions every quarter? How did they handle the pandemic? What happened? You know, all this stuff you're learning, right? All the while getting a return. And like you said, it's a good way as well. I've heard a lot of people say that as well. They go to the GP and say, "Hey, I'll invest with you," and blah blah blah. But please take me along for the ride with you as well. And I think it's a great way to make connections with people as well, right? If you're giving someone money for a deal, and of course you're getting a great return, and you're being part of a really cool deal, but at the same time, of course, they're going to be willing to help in some way and kind of provide some value, right? Who wouldn't be? So I think that's a great way for people who want to learn. And I think that, like you said, you got your feet wet, right? Then you get an idea as well what it's all about, and might give you an idea of like, what do I really want to do? Because syndicating large multifamily deals sounds like fun and it's going to be awesome, and you know what I mean? I'm going to make all this money and blah blah blah. But then you might realize, wait, I think I like being, I've heard it a lot. People thought they wanted to be active, and then they realized once they were active, no, I actually prefer the passive side. I think that's a great way to start for a lot of people. So what was your first active deal?
Yeah, my first active deal, I had 15 units, and got a equity, got an investor and everything. And that was start to finish. And it was probably the scariest 3 or 4 months of my life, because I mean, I had folks that I could go out and lean on, but I'm like, we didn't partner up, and that's where it went from partnering in an LP to I got this 15 units. And I did have a friend, business partner, but he had the same education level as I did, and we just found an investor that was willing to take a chance with us. And we went down and did it, and it was a $1.6 million deal. So not small, it was over that $1 million. And, I think I had sweaty palms. I didn't sleep, it was just, I probably can't tell you how many versions of the business plan. I had contingencies of contingencies and numbers to where it was just like, just overwhelming. And at the end of the day, we're just like, we got the closing, and it was like anticlimactic. Like, okay, we made it here. It wasn't that bad. We survived. We're going forward. All right, now let's implement the business plan. And we're making mistakes along the way. Made mistakes with it. And I think you'll have I'll talk more about mistakes later when we get into that section. Okay. But but it's that one right there was, getting that first deal of going, okay, I did this. Somebody gave me money. I took down this deal. Okay, wait, wow, holy crap, we can do this. Let's find the next one, and then it becomes addictive after that, and then snowball, and then and then you're it was the door, the floodgates open, and it was just like we're off to the races. And
yeah, very cool. Yeah, congrats on that. Like 15 units is a sizable first multifamily, but also 1.6 million is no joke on your first multifamily deal as well. Right. And I'm sure a lot of people are listening and thinking, well, I would love to bring private investors. I hear people talking about it all the time. How did you find that first private investor? And how did you, I'm not saying, I don't want to say convince them, but persuade them that, to have faith in you? Because obviously you guys, you've done single family, but again, it's a jump up to go to, multifamily, right? So how did you guys go about that?
Yeah, that's a very good question. And, the importance of networking and building relationships. So literally, I met this gentleman like a year before we found this property. Met him at a conference in person, started talking. We were talking about our different markets, and, and my property it's in Arkansas, and everyone's like, Arkansas. And I'm like, exactly, that's why I'm there. So, And this guy was like, you know what? Hey, I've been through University of Arkansas. It was a collegiate wrestler and stuff. So he'd been through there for me. He's like, I kind of like that area. He goes, we just started talking and started breaking them down. This is why I like this market. This is, yes, Arkansas as a whole doesn't look pretty, but when you carve out my market, hey, it looks just as good as Denver, Oklahoma City, Las Vegas, different places. And but yet there's not a lot of competition, getting cap rates at, 6 to 8% cap rates on Class C still, um, and he was just like, man, let's just keep in touch. What are you doing? And I would just periodically just reach out to him. Hey, we're looking at deals. I'm going back out to Arkansas, walking another property, and just could let him know what we were doing as we were progressing. And then once we got this one, I brought him like, dude, man, I really want to talk to you about this one. I was excited. I'm like, the numbers are looking good and stuff. And he's like, all right, let's talk. And, obviously, especially on your first deal with an investor, yes, part of it is the numbers of the deal, but it's more of is how do you connect with them? They're looking at is, are you an honest sponsor? Are you in this for the right reasons? Are you in this just to make a paycheck? You don't care about the asset? Are you really going to look out for your investors? Where are your priorities? And so, and I think that's important. It goes both ways, because I want an investor that's the same way. I want an investor that looks at these properties as these are homes and these are communities for tenants, not that this is my bank account. So, I think so building that trust and rapport, and it really made it easy. He was the only person I had to call. I called him and started a conversation. He's like, we're in. How much you want? I'm like, this is supposed to be harder than that. Not that it's easy, but it just goes back to just keeping those relations and keeping the contact and the communication going with those potential investors is key.
Yeah. Well, why did you pick it out of interest, Arkansas? How did you stumble? You mentioned that, it's interesting. You're the third or fourth person I've spoken in the last week about Arkansas that invested in Arkansas. But
really,
yeah,
I want to.
Yeah,
Where's getting out? Yeah, so it's a little bit by accident, So if you go a lot of places, say, all right, when you first look at investing, like look in your backyard, look where you live. Well, I live in Colorado. I was looking in Denver, and I was like, a Class C property was selling a value add that had been value added 4 times, was a sub 5 cap rate. I'm like, there's no meat on the bone. I'm like, and so everything was getting scooped up here. It was overpriced. Fighting with the I was just like, I don't want this, and so we just started looking around at different markets. My partner and I, we actually met our first duty station in the Air Force, and he's a veteran himself. Was at Little Rock Air Force Base. And we just happened, we had a real good friend of ours that still lived there. He got out, retired, and he was working for the big, the state hospital. We were just casual conversation. He's like, man, I'm busy. And we're like, dude, you're into computers. How busy can you really be? You rebooting people's computer. And he's like, no, man, we're, they're going around there. They're buying up all these clinics out here in Northwest Arkansas. I'm like, why? He's like, I don't know. So, all right, fair enough. So we just started, we going in, like, why? It's kind of why is this big chain going in and scooping up all these clinics? And this is like a for-profit type of healthcare system. I'm like, there's got to be some underlying reason for it. And we started digging into it, and it's like, holy cow. You guys, so Northwest Arkansas, we started honing in on it. You got Walmart, JB Hunt. It's got like there's 15 there's probably about 7 or 8 regional companies, plus there's over 1,500 offices there, because if you sell at Walmart, you have to have an office in Bentonville, Arkansas. So guess what? There's more employees. Prices. University of Arkansas has had record number of attendees in the last like 5 years. Every year it's broken a record. And so I'm like, wow. And we just started building relationships. So that's how we focused on there. And so, so we focused big time in 3 counties, Northwest Arkansas, and then there's 2 zip codes in Little Rock that we look at.
Wow, very interesting. All that information is out there, but for someone looking to research a market, right? Again, like the wealth of information is a good thing, but it can again be overwhelming because what do you focus on, right? So when you were looking that, you found out through your friend that something was happening in Arkansas, where did you go then? Well, how did you know what to look for, and how did you go about looking for that?
And that's where that education came in, for reading books and stuff of really, how do I determine my market? There's hundred thousand markets just within the US, right? Any little
Yeah.
municipality, it can become very overwhelming. Once we got that bit of information and started looking, really what we look at is we go in with what is the growth population? It has to hit a certain metrics. What is the median income? It has to hit a certain metric. And what we're doing is we're looking at what does that growth metric look like over the last 20 years? Median home price, median income, unemployment, and then crime. So it's really those six, seven things right there we look at, and we line them up, and they need to be trending and going in the right direction. And so that helps us solidify, and that's how we were able. I'll take Little Rock. We broke that down. The reason we're only in 2 zip codes in Little Rock is because the other ones in there didn't fit those metrics. The high crime, population decrease, whatever the case may be, it didn't fit our criteria. So that was helpful. Again, it goes back to, it was objective data, and it's all online. So there's such sites as like City Data, I think citydata.com, Bureau of Labor and Statistics, the Census Bureau. There's so many. I mean, you just Google the data information, and there's more in my head, but if for whatever reason my mind went blank. But they're all saved on my desktop. I just start clicking buttons. But yeah, there's so much out there that you can get, and with that is looking at trends across different platforms. So that's one thing. Is yes, Bureau of Labor Statistics is very accurate, but a lot of times they don't have all the information for what we're looking for particularly. So if you go into like City Data, but then you go to I can't remember. There's a couple different platforms where it has the same information, but it's different. So we'll kind of take that and take it collectively to go, okay, this is kind of the average of that information, and look across. So yeah, so don't just go, hey, I'm using City Data and that's it, because they may not necessarily be the accurate all the time or everywhere.
Very interesting. Yeah. And picking the market is key, right? It's one of the most important decisions you can make, is to pick the right market, because that you have a good market and an okay property, you're going to do a lot better than a good property in a crappy market, in my opinion, anyway. What was the business plan on that first property? Do you guys have a strategy, or did you just find what you thought was a good deal at that point?
No, we went in, and so good with lessons learned. So we went in with a strategy and then changed it.
Okay.
And then, so basically our new strategy, where we're going in is we're doing a gut renovation on all the units, and we're increasing rents. What we should have done is stayed with our original plan, because COVID threw a wrench into everything, just like everybody else's life plan for the last year. But yeah, so we pivoted. We probably shouldn't have, blah blah blah, but it's we're making money, and so I can't complain. We're not maximizing it. We are running into some issues right now with our refinance due to COVID and some of the new restrictions. But this one here, it was a B class property that was had D class tenants in it. It was in C minus condition, but it was 0.9 miles from the University of Arkansas. It's the bones were just there. So we're going in, and we've done 100% turnover on the tenants. So the tenants brought up the quality. Going through and doing the renovations, bringing it back up to a BB plus asset, with amenities and stuff. And then we're going to go back. We're just finishing up, or in the process doing that second round of the renovations. And then we're hoping that, with stability and stuff with COVID and everything, and people are going back to school, that, we can bump the rents back up to where they should be, and really make the property bounce. So we've increased right now. We've already increased rents $100 a unit, and we probably have another 150 to 200 that we can potentially raise them to.
And the remaining raise, it'll just happen organically. There's no need for improvements on those units. You've already done that. It's just a matter of COVID has slowed things down and made it harder to get.
Yeah.
Interesting. And when you say with the refinance you're having issues, what kind of COVID related issues are the banks?
So when we got this contract, we did it as a bridge loan, right? Because it was in such poor condition, but yet it didn't qualify, and it wouldn't qualify for agency debt. You had some vacancy issues and stuff, and everything is like, hey, 12 months. You just season it for 12 months, get everything turned up, get your vacancy up, do a refinance into long-term debt. That was great. But, in these tertiary markets, the lenders, whether they're local or even agency, is going, oh, yeah, we actually want 24 months of stabilization and you owning it versus the 12 months that we told you, over a year ago. And so that's where we're, oh crap, how am I, we've been jumping through hoops. That's reason I just shaved my head because I was just losing my hair. I was just like, you know what, I'm done with all the stress. But we finally found a lender now that's going to take a chance. We're going to get it refinanced. We're finishing up that process now. We just won't be able to pull any money out. The loan to value was very low because of, again, that 12 months versus 24 months. So yeah, so that was because part of our plan was, hey, we can do a cash out refinance, give some equity back to our partner, have some stuff, use this. Now we can go on to the next plan. Then now, hey, guess what? We have long-term debt. So that was the lesson learned, and the crinkle in everything is, I would say, is if you have bridge debt, there's nothing wrong with bridge debt, but set it up to where it converts to long-term debt after X number period of time. Don't have to go through the thing. So that's, it was a lesson learned.
Yeah. That's what it's all about. A lot of this stuff, right? Is the lessons that you do learn. Sometimes you got to learn them the hard way. That's how I learn best, unfortunately. I'm guessing you probably had because obviously Arkansas is not that close to Colorado, right? It's not like you can drive to the property every day or whatnot every week. I'm guessing you had a property manager and contractors that were doing the work. For you, what does that involve in managing that kind of project? For people who are trying to understand, like, what, how busy, how much work you have to put into something like that, is it pretty hands up, or do you have to be managing those contractors, managing the manager a lot of the time?
Yeah, I have probably in the course of owning just this one property fired, I think, 5 different contractors. Just stealing money, or not, for various reasons, right? Mm-hmm. And I finally found a really good contractor, just awesome. And what's great too is he's also an investor. So really, if you find a contractor that also invests in multifamily, chances are they're probably going to do a good job for you. At least that's my small experience. But and in property management, yes, it's creating that communication and the expectations with property manager. I'm on my second property management as well. I heard the first one. They wasn't handling it, wasn't meeting expectations, weren't doing proper communication. Now I have a kick butt contractor and a kick butt property manager, and guess what? And they work well together. Where I knew things weren't going on is when I found my good contractor. He was doing a great job, but there was friction with the property management. And come to find out, there's jealousy, which I don't understand, because it's not like he doesn't manage properties; he just does contract management. But anyway, that you have to deal with. That's part, being that out of state investor. That's one of the challenges, is getting the quality on the ground. Yes, if you can get through that, and a lot of that, it's going to be trial and error. Don't be afraid to fire. Fire quickly, hire slowly is really the best mantra. And and it goes back to is you can find Facebook groups or webinars specific to is, well, how do you vet a property management? I'm sure there's books on Amazon on how to vet property management. Get stuff like that, and learn how to ask those questions. And then as you go through, you're still going to make mistakes. So what? Just say yes and figure it out, and then learn from those mistakes. Now, next time you're having those interviews and you're working with the next you're in a different market. Hey, all right, I learned from this, so I'm going to ask this, this, and this, plus these other questions. Um, and it's staying on top. So that being said, is when property management first takes over, it's I get weekly updates. Where are we at? Where are the ads? I want to see the ads for the vacant units. What's your pre-leasing? Really in depth, and have phone Zoom meetings, because I want to see them in the eye. And if they get squirmish, then I'm like, hey, what are you hiding? Type deal. But yeah, just communication. Now I have about maybe once a quarter with my property management. I get monthly updates, quarterly meetings. Hey, what are we doing? What's going good, bad? All right, what are we looking for this next quarter? All right, cool. Let's rock and roll. So communication.
And through going through a number of different contractors, what has been some of the biggest things you've learned in terms of hiring, outside of, you said, finding one that's an investor as well, but I'm sure there's some other stuff. Like what do you really look for now when you're trying to hire a contractor? Because I'm sure you've learned some rough lessons.
Get everything in writing, and that's when you're and if and so, because Arkansas is one market. I'm also in Indiana and Florida. I have less issues in those markets, and nothing against Arkansas, but what I'm finding in some of these smaller markets, a lot of these contractors, it's a lot of more handshake. Oh, okay, you want this? What's your budget? Oh, okay, I'll get within that. And really, what gets lost is the expectation, or like, oh well, I thought you wanted to use the old toilet. I didn't know you wanted me to replace all this. So, really diving down and getting not just a scope of work, but broken down with, this is no kidding, the materials list, cost for materials, labor per hour, get it really in depth. And, I actually, part of my, starting out is I got pushback. I asked this question, hey, can I get a scope of work, breakdown? Or like, oh, well, we don't, I don't really do that, I'm like, and that should have been my first clue, my first warning. So now, that's the first part of, hey, I need a scope of work. I need a quote. I want your quote broken down. I don't want it written on the back of a napkin. I don't want it just, hey, for a unit turn, it's going to be X number of dollars. I want it, you're doing what, replacing faucets. And if I don't get that next, just go on, because you're gonna have problems. That's been my experience.
Right. Yeah. There's plenty of them out there, right? You've just got to find ones that work the way that you want them to work, right? And have them meet your expectations.
And that's it, especially if you know somebody in that market. If you have a good relationship with, say, another investor or somebody that's already in that market, ask for a referral too. That's also another key thing, because they've probably gone through a few contractors themselves. And if they're continually working with one contractor, chances are you're gonna be happy with that contractor as well.
Yeah.
And that goes for anything, attorneys, insurance, property management. Get those referrals.
Yeah. So at this point, how many active deals have you done? How many units do you have between you and your partner?
We are coming up on, according to what I have now in the pipeline, we're getting ready to close on. It'll put us about 250.
Wow. And you built the first one in 2019, I believe you said, right? This 15 unit. How have you been able to scale so quickly? What do you think that the secret to that has been?
Building out a team. So my company is just me and my partner, but I have two other companies that we've aligned. So the other company, they're young Navy guys that are great with numbers, Excel spreadsheets. They're analytical geniuses, and they do the underwriting. I'm really good at picking up the phone, making calls, building those relationships. So that's what I focus on. And then we got another guy we're actually bringing on to help us source deal. He's a salesman, and happens to be a veteran himself. We just seem to kind of click together and communicate very well, and don't get our feelings hurt that often. And so he's gonna do the deal sourcing. So, and then now I'm pivoting back towards not pulling away from deal sourcing per se, but I'm focusing more now on capital raise, so building a bigger investor base, because we're our deal sourcing is, it obviously always needs improvement, but right now we have more deals than we can take down. And so I don't like that. So now it's like, all right, we need more money. And so that's, like I said, so my 2021 goal is to get more investors to come on board and trust us and invest their money with us so we can keep doing good things.
I think that's a pretty good problem to have, though. Have more deals that you can kind of take down. Obviously, you'd like to take down every deal that works out. But out of interest, how are you guys sourcing deals? Is it just broker relationships, or do you have any other strategy?
Yeah, so it's a combination. So right now, pre-COVID, it was pretty much probably 80-90% all broker relations. When COVID hit, we were still getting deals, and we still get deals from them, but they were still overpriced. They were still kind of pre-COVID, expectations. And so we shifted, and actually, I honestly didn't even close a deal at all last year. Came close, but we took a step back and we pivoted, and we've started to go direct to seller. So we actually hired a VA and do a cold call campaign. So we go and pull lists, our target market with our target criteria. And we were doing it ourselves, but it was taking 3 of us like a week to call one list. My VA, she can do it in like a week by herself, call the list. And she's working part-time. So, and that's what she's done. I mean, she does a phenomenal job. So we've been extremely happy with that. But yeah, we've got, that's all. So we have 1, 2, 3, 4, 5 deals. So 3 under contract. One we just put an offer in. Another one sitting on my desk. All 4 out of those 5 are all off market, direct to seller, except for one. One was from a broker, due to a broker relation. So we still keep those out, but you have to be willing to do what others aren't. Don't just wait on the broker. If you're hungry and you want to succeed in this and find those deals, figure out a way to find them.
Yeah, very cool. So this VA is, you give her the list. She finds the owners, calls them up, and then if it's a warm lead, passes it on to you guys.
Yeah, so we get the list and we scrub it, pull out duplicates and stuff. We make sure that the owner's information is there, and sometimes it's not even the owner's information. It might be a company information or the LLC, but we make sure that there's a phone number or multiple phone numbers associated with it. Yeah, and then we put it into a nice Excel spreadsheet. She goes through and she just calls it. We haven't even gotten fancy and gotten one of those Mojo dialers or the phone burners. She's working 20 hours a week. She's making 300 to 400 calls a week for us, and she can cycle through. So we're just slowing it down. We're just like, hey, what she's finding for us has been keeping us busy, and we actually operate in 3 markets. So she has 3 lists that she'll spend basically like 2.5 weeks on each list. So she'll call it and then call it again and just, keep calling to make sure, because there's a lot of them go to voicemail and don't get anything back. And then she'll transition. She'll do the next call list, do that for like 2 weeks, do the next one, then go back to the first one. And so like she just started our Little Rock call list again. And, we have 2 more warm leads. So those I haven't even counted and what we're looking at. And I don't even know if they meet our criteria, but I've got them in my email box. She emails us all the contact information, pertinent information, hands it off, and then I call them. So now, because I hate cold calling, because I hate rejection, But now I'm calling somebody that wants me to call them, and it's great. I'm got confidence and go through, and so that's just how we're doing it.
Out of interest, what is the script that you guys gave her? What does she say when she calls up? Because I think, I've never done it myself. It's something I've definitely looked into. Is when you speak to owners, right? I think they get letters and they get calls all the time, and it's really hard to get them to engage and to have any kind of conversation with them. It seems like from the outside looking in. What kind of script do you, if you don't mind sharing, do you guys have it?
I don't remember it word for word. But, so basically, I'm not a big proponent of a hard sell. I'm not, I hate, not that I hate salesmen, but I hate that hard sell. hey, sell now or blah blah blah. And so we take a little bit of a softer approach of more. It starts out conversation. Hey, here's a little bit about our company. Our founders were veteran owned and operated.
Mm.
Yeah, so we play on those sympathies and stuff of we got veterans and they're doing a good cause. We donation. We're buying, purchasing in these markets, and just wanted to call here. Hey, are you interested in potentially selling? Um, and it's working for us. So we kind of found our little niche, and especially in Arkansas, right? It's a red state for the most part. They love military. There's military bases and stuff. And that's in our other market we're looking at is Pensacola. And we're having great, taking that approach where there is kind of that veteran community, more, I guess, I won't say right leaning anymore because I'm not part of no insurgencies or anything, but, you know, we try to keep it, uh, we use it to our, try to use it to our advantage, but in an honest way. And we focus on our affordable housing. We're looking for a safe, community. We do give back to the community and work with the community. Um, and so far, I mean, it's working for us, and we're going to stick with it until we need to change it.
Very cool, very cool, very cool. Yeah, thanks for sharing all that, man. Really, really interesting everything you have going on. And obviously, 21 is going to be a big year for you as well. So it's definitely exciting times, man. Very cool. I appreciate you sharing everything that you do personally as well. But as this show is called Wrestling with Real Estate, I try and incorporate some wrestling related real estate questions. So the first question is, what would your wrestling name be?
Oh, wow. I'm going to go with, it's going to sound dumb, but Sunset Litter.
Okay.
Street I grew up on and the name of my first pet.
Perfect. We were talking about this before. Someone told me last week that that's how you come up with your porn star name. So I was like, all right, that sounds like a good way to come up with a wrestling.
Not original.
No, it's original because I've never heard Sunset Litter before. But yeah, I love that one. Every wrestler has a special move. What is your special move in real estate?
I think my special move is relationship building. I think that's key to this. Relationship building goes along with team building, and yeah, that's my strength, and that's my knockout move.
Very cool. What's been the biggest body slam you've taken in your real estate investing career?
Probably this refinance.
Oh, okay.
Just be, lessons learned of just not, because it's still not done, and that's the thing is our there's a chance that we may lose this property still, until we get it signed, and refinance, because the notes due. So right now we're working through that, and we think we have an exit strategy, but it goes back to the body slam of not being fully prepared. And so definitely going to learn from this one. And, also look at it. If we lose it, we lose it. I'm not mean that in a flippant way, but it's more of, all right, we knew it was going to happen. I'm glad it happened now. Let's learn from it. Let's mitigate it. We're still going to make our investor whole. My partner and I, we're going to come out of pocket, even if it takes us 3 more years to give them their principal. They're going to be taken care of. And then we're just going to keep moving forward. We're not going to cry over spilled milk. If it happens, knock on wood, so far it shouldn't, but it's still there. Still the possibility.
I'll have both my fingers and everything crossed for you guys. I'm sure guys, you seem like a very resourceful guy, so I'm sure you'll find someone that's willing to do that. Out of interest, if you went back, what would you have done different? Took a longer term, maybe a 2-year, 24-month loan, or?
Yeah, I would have done more of a price trade instead of getting the bridge loan. Initially, probably would have maybe have gone with a local lender, even though it would have been a recourse at that point. But I would have still, I'd have been locked in for a longer period, and I probably could have still gotten some interest only. So our bridge loan was interest only for the first 12 months or so. So going back, I think it would have just on the financing side. The other thing I could have done differently is stuck with our original plan. So our original plan was to go in, turn this into an HOA, because the way these are set up, they're townhomes actually. They foreclosed when it was built. They turned into apartments. but it met all the criteria to be separated out and sold off as individual homes. So we were going to go do that and start selling the homes off. So I think if we would have done that or the lending, we would have been fine.
Okay. Yeah, lesson learned, I guess. So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it and how did you overcome it?
It's first deal. And the first one we LP'd in wasn't too bad, but the first one, where we got the general partner, we got it's the analysis paralysis. Are we going to do this? Can we do this? And so there's that fear of, we almost walked away. And I'm glad we didn't, so just that taking action on that first deal.
Was there anything in particular that helped you overcome that fear and move forward?
I think having a good support network, having some other colleagues that I could reach out to that were like, dude, this is a good deal. You've got this. This is good. You got, basically just having that reinforcement of what I was doing was right, and that the business plan was sound. What we were doing, was going to be successful. And, so that's helped get over having that confidence in that support network.
Yeah, very cool. Very cool. Well, thanks for sharing everything, Colby. It's been really interesting to listen to, how you started out with single families, how you grew to knowing that multifamily is where you wanted to be, doing your first deal as an LP, then taking down that 15 unit, which, you talked a lot about, and that is a promise. But, there's been a lot of growth, no doubt, in all of this, and it's phenomenal to see what's going to come next for you. If anyone wanted to help you in any way, if anyone could do anything for you after listening to this, what do you need? What could someone provide to you?
I'm looking for more, investors that want to get into the real estate, that, like our mission, what we're doing, and want to potentially partner with us. So we're looking, when I mean by that is not just for limited partners, is I like to JV deals as well. So if somebody, is wants to get into this, into the multifamily, but they don't know how, they have some money saved up, give me a call, shoot me an email, let's talk. And especially if it's in the markets where we're interested in, we're on board. And the other thing too is, and it goes back to just the abundance mindset of helping folks is, if I can't help you, there's probably somebody in my network that I can put them in contact with, to help them out.
Yeah, very cool, very cool. And on that note, if people want to reach out and get in touch with you, or if they want to find out more about what you've got going on, how can they find out all that?
Yeah, shoot me an email. Is really the easiest. So my email is colby.bowers@veteranpride.org. You'd also check out our website, www.veteranpride.org. And reach out. I'd love to talk real estate, and my wife hates listening to it, so I need somebody to talk
to. Very cool, very cool. Well, Colby, thank you so much, man. Really appreciate it.
Thanks for having me on. This has been fun.
Absolutely, man.